Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 22nd, 2025, and we're diving into Hanmi's recently released third quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Hanmi's performance this quarter.
Let's get started with an overview of Hanmi. As the parent company of Hanmi Bank, they serve multi-ethnic communities across several states. Their focus is on real estate, commercial, SBA, and trade finance lending. Now let's delve into their Q3 2025 results. Revenue and profitability overview. Let's start with the top line. Hanmi reported a net income of $22.1 million for the third quarter, translating to an adjusted EPS of 73 cents, which beat the forecast of 66 from 3 analysts. John, what are your thoughts on this performance?
Hanmi's performance this quarter is impressive. The net interest margin expanded by 15 basis points to 3.22%, and pre-provision net revenue increased by 16.4% quarter over quarter. This growth is driven by robust net interest income and well-managed expenses, showcasing Hanmi's operational efficiency.
Indeed, it's a strong showing. How does this compare to their previous quarters?
Compared to the second quarter, net income increased by 45.9%, and the return on average equity rose to 10.69% from 7.48%. These figures highlight Hanmi's ability to enhance profitability through strategic initiatives and cost management.
Loan and deposit growth. Moving on to loan and deposit growth, Hanmi's loan production reached $571 million, a 73% increase from the previous quarter. What factors contributed to this growth, John?
The significant increase in loan production is primarily due to Hanmi's investments in their commercial lending teams and expansion into new markets. This strategic focus has bolstered their commercial loan segment, which is a key asset class for the bank.
And how about their deposit growth?
Deposits grew to $6.77 billion, a 0.6% increase from the previous quarter. Notably, non-interest-bearing demand deposits remained steady at 30.8% of total deposits, which is a healthy sign of customer loyalty and trust in Hanmi's services.
Credit quality and asset management. Credit quality is always a critical aspect. Hanmi's credit loss expense decreased significantly this quarter. Can you elaborate on this, John?
Absolutely. The credit loss expense dropped by $5.5 million to $2.1 million, reflecting improved credit quality and effective asset management practices. Nonperforming assets also decreased by 17.7% to $21.4 million, indicating a reduction in risk exposure.
That's encouraging. How does this impact their overall financial health?
With an allowance for credit losses at $69.8 million and net loan recoveries of $0.5 million, Hanmi is well positioned to manage potential credit risks. Their proactive asset management and conservative credit underwriting culture are paying off.
Strategic initiatives and future outlook. Looking ahead, what strategic initiatives is Hanmi focusing on to sustain its growth?
Hanmi is committed to executing strategies that deepen client relationships and optimize their balance sheet. The USKC initiative and expansion into new markets are pivotal in driving commercial loan growth, which remains a key focus area.
And what about their capital management strategies?
Hanmi's capital position remains strong, with a tangible common equity to tangible assets ratio of 9.8%. They also repurchased 199,698 shares at an average price of $23.45, reflecting confidence in their long-term value creation strategy.
That's promising. Any final thoughts on their future outlook?
With a solid foundation and strategic focus, Hanmi is well positioned to deliver durable, long-term value for shareholders, as emphasized by CEO Bonnie Lee.